Thank you so much for joining us here on a Monday. I'm Marlin, Bohling, your tour guide to the ag commodities. Let's get you refreshed on what's going on with our ag commodity trade. We'll start with our quotes from bar chart on the corn. So let's take a look at what they're doing right now. And on the big board, we have the March, now 3 lower. That goes into delivery tomorrow. So most of the focus is now on May, and it's actually down 4. We're at 645 1/4. Wow, that's 7 cents off of our overnight high. We have December down, well, now it's up a half at 576 3/4, but it's struggling just to even tread water here on the corn. Now on soybeans, we are weaker, and you have the May contract 5.5 lower. We're at 1513 3/4. You have July down 6 3/4, now down 6.5, right at 1502 even per bushel. So we're within about 1.25 of our low of the day there, off of our overnight high, believe it or not, by roughly about 11 cents. And if you go to the new crop November soybeans, we're down 3 3/4 at 1370 1/4. Let's go ahead and switch over to the wheat market now. And in Chicago wheat, wow, we have May down 7.5. We're at 714 1/4. Likewise, you have July down 7.5 cents. In Kansas City wheat, you have May down 10 3/4 at 824 1/2. And that would be off of our overnight high there by roughly 13 cents. And July currently down 11.5 cents. Spring wheat trade, you have the Minneapolis May down 2.5. We're at 880, and July down 2 3/4 cents. That May contract 7.5 cents off of its overnight high. Checking out the cotton market. We'll go with, since March is not trading anymore, let's go with July. That's a high volume contract. July down 86 points at 84.22 per pound. And December new crop cotton down 81 at 83.51 right now. Well, it's my pleasure to welcome aboard none other than Mr. Chris Swift. He is with Swift Trading. He's based, of course, in Nashville. Good morning.
Good morning, Marlin.
How you doing?
I'm good, great.
You're looking all dapper and bright-eyed and bushy.
Yes, sir. Ready to roll this morning.
So I'm impressed that you're that chipper when you have the markets kind of in the dumpster like that this morning. What do you read into that? Is this a one-off, or do you think this is the start of a bigger sell-off?
Well, we got 4 weeks now. So if we think about what's going to transpire in the next 4 weeks, we're going to get increased plant harvest from the South America, Brazil. We'll see what more the Argentina crop is going to be. But then the biggest issue is we're going to have the March 31st planting intentions. Once we get the March 31st planting intentions, the world will pretty much know a large figure of what soybeans we'll have to work with for the remainder of the year.
And then the trade will say, yeah, but can we believe it?
Absolutely, and it may not, but it will create a tremendous amount of volatility, some volume, and maybe even some price direction if you get those acres pointed towards the beans and you get some improved harvest out of Brazil. Because last week we know that Brazil was around 22% harvested, a little improving weather, and we could really speed that up quickly.
Well, of course, over the last week or so, we've had pretty dynamic weather in the northern half of like the Midwest and the plains. Some areas, my goodness, they have feet of snow, you know, snow drifts everywhere. They can't even think about doing any field work for quite a while yet.
Right. But
it's a little early to be concerned about it just yet, right?
Oh, I wouldn't be concerned at all. If anything, look towards Minneapolis spring wheat. So all that area where they're getting that heavy snowfall, that'll just saturate down in the ground and should make for a really good spring planting for spring wheat.
All right. So the KC wheat under quite a bit of pressure.
It is. There's that one little bitty area that's in that really heavy drought impact area. But other than that, we noticed that areas all around it are starting to lighting and shade there a little bit. So we're seeing more and more of the drought subside.
Fingers crossed.
Let's absolutely.
Try and get La Nina out of here. All right, we'll take a quick break right here, and then we'll come back and we'll take another look at our livestock rate, see how it's holding up on a Monday right after this. All right, we're back with you with Chris Swift. Let's take a look at our livestock trade. And on our quotes provided by Bar Chart on live cattle here so far, just not a lot going on, Chris. We have April 15 cents higher. We're at 165.52. And you have June 32, now 35 cents higher at 161.42. So, you know, it is the high of the day, but is that impressive or not when it's only 35 cents higher? I don't know. You be the judge. If you look at feeders, you have April now 95 cents higher at 194.52. Now, that's interesting because we had the placements about 1 point lower than expected in the cattle on feed report. And now we're almost on the high of the day. Look at that, about $1 higher. We're off of our earlier low by $1.40. Now that's kind of peculiar. When it started out this morning, it's like it didn't care at all about the cattle on feed numbers. Now it's like maybe it take notice, you know. But how can that be about a half hour after the trade?
Well, I think a lot of it has to do with which animals we're talking about. So in the fat market, we still have plenty of animals on feed. Year over year, down 3 to 4%, but month over month, we've remained at 11.5 to 11.7 million for 8 months in a row now. So I think when we look at the differential between the fat market, there's very little premium in that market in comparison to the feeder. And so we look at our next venture out there, which is going to be increasing the herd size. So we have to have the smaller animals. They're going to start pulling the heifers out of the kill mix, probably pull a few cows out, and we're still very, very early. We're 2 months away from having enough grass pasture out there or even aspects of hay production to be able to say we're going to be able to hold those animals back. So we still got 2 or 3 months to have to go through before any big decisions will be made by the producer.
Now, one thing I did notice, and we'll see if things are changing, let's go ahead and take a look at our lean hog trade right now. Because when we got the cattle on feed numbers last Friday, we also happened to get a cold storage, a cold storage report, and those numbers were not particularly friendly when it came to the hogs, because the pork numbers were higher than a month ago, also higher than a year ago. And you can see the lean hogs are really starting to slide here, Chris. You have the April lean hogs $1.20 lower right now. We're at 84.82, and the May contract down $1.50. We're at 93.85. That's a fairly steep drop. Now, do you see more involved in the current pricing on the lean hogs than just the cold storage?
Oh, yeah, absolutely. And a lot of it has to do with the basis of it. The basis right now, the lean hog index still trading around 75. So as the futures have to converge to the index next to expiration, then right now carrying significant premiums, we assume that they'll either meet in the middle or the index will rise to the level of the futures or the futures will fall to the levels of the index. But right now that width is pretty wide and the index has not been rising very steeply. So therefore, the futures kind of meld down to where the index is.
So we had really good weekly export sales on pork
we have.
last week, over 50,000 tons again.
Right.
But yet the market didn't really seem to respond, and it's not today again either.
Yeah, pork production is still very high right now, even as much as we've called. And I mean, I think we're probably 7 quarters in a row of lower hog production now.
Wow, okay.
So we were really ramped up.
Yeah, all right. Well, we'll see if China does come back into the market or what happens there, but that could be a big deal. All right, well, I appreciate it. Thanks for coming in.
Always a pleasure, Marlin.
And we love having you come in. Chris Swift of Swift Trading with us here this morning. Janet, I'll turn it back to you.